Good afternoon, everyone. Welcome to QuestMortgage webinar, and thank you for setting aside some time to join us today. My name is Carlo, and I'm an educational specialist at QuestMortgage, and I'll be your host today. Today's topic is your questions answered, home buyers plan and credit scores. We're joined by our in-house expert from the QuestMortgage advisory team, Noor. But before I introduce her, I'll just quickly run through a few notes. Today's session will be recorded and we'll have an on-demand version available next week. So if you have to leave early or would like to rewatch an important section, we've got you covered. Just keep an eye out on your inbox for the recording. And in the meantime, if you have any questions during the presentation, please type them into the Q&A window available at the bottom of the Zoom interface. Our mortgage advisors are answering questions as we go. And we'll also answer as many questions as we can at the end of the presentation. Now, before we get into it, I'm just going to read this quick disclosure. The information and opinions in this educational material is for informational purposes only and should not be used or construed as real estate, mortgage, financial, tax, credit, or investment advice or recommendations by any individual. Rates and figures presented are for illustrative purposes only. And for more information, please refer to the Community Trust Company and Questrade legal notices. Any information or testimonials relating to past performance does not guarantee future performance. QuestMortgage and CTC are wholly owned subsidiaries of Questrade Financial Group Incorporated. Okay, all right, and now without further ado, I'm pleased to introduce you to Noor. Noor is a mortgage advisor at QuestMortgage and is an expert on all things mortgages and home buying. She will take you through what you need to know about home buyer's plan and understanding your credit scores. Plus, she'll be available to answer the questions you submit through the Q&A tool on Zoom. So with that said, take it away, Noor.
Thank you, Carlo. Hi, everyone. I'm Noor. And on today's agenda, we will cover what the home buyer's plan is, the eligibility, the repayment, and withdrawal of the home buyer's plan funds. We will also take a look at important things you need to know when applying for the home buyer's plan. Next, I'll walk you through the application process and cover the typical processing times. Then we're going to segue to other programs you can take as a first-time home buyer. Next, we will talk about understanding your credit score, highlighting things such as why it's important to have a good credit, how it's determined, and how you can improve your credit. Then we will cover how we can help you as a first-time home buyer. And finally, we will host our Q&A session near the end of our webinar today. So if you have any questions, feel free to save them until the end or type them into the chat at any time during today's session. Perfect. And now let's talk about the home buyer's plan. With the home buyer's plan, you can withdraw funds from more than one RSP as long as you are the owner of each RSP account, up to a maximum of $35,000 per borrower. If you and your spouse or common law partner both apply, you can get up to $70,000. When you withdraw RSP funds for the home buyer's plan, you need to start paying it back the second year after the year in which you withdraw the funds. You have up to 15 years to pay it back. You are required to pay back a minimum of 1/15 of the withdrawal amount every year. All withdrawals from an RSP for the home buyer's plan must be made within 30 days of purchasing the home. RSP contributions must be held in an RSP account at least 90 days before they qualify to be withdrawn to participate in the home buyer's program. Now, for the eligibility, you must be considered as a first-time home buyer, and that if in the 4-year period you did not occupy a home that you owned or one that your current spouse or common law partner owned, you are a resident of Canada, you have a written agreement to buy or build a qualifying home, either for yourself or for a related person with disability. You intend to live in the qualifying home as your primary place of residence within 1 year after buying or building it. If you buy or build a qualifying home for a related person with a disability or help a related person with a disability to buy or build a qualifying home, you must intend that related person with a disability lives and occupies the qualifying home as their primary place of residence. What is a qualifying home? A qualifying home is a housing unit in Canada, which includes a single family home, semi-detached home, townhouses, mobile homes, condo units, or apartment units, such as duplexes, triplexes, or any apartment building. For the repayment of the home buyer's plan, as an example, if you are purchasing a property in 2023 and you borrowed $60,000 from your home buyer's plan, you will have to start paying back in 2025. Your repayment back to your RSP will be $4,000 each year. And that is basically 60,000 divided by the 15 years, giving you 4,000 for the year. If you miss the payment, or if you don't make any repayment for the year, for example, the 4,000 per year on a 60,000 home buyer's plan withdrawal, you have to include the 4,000 as an RSP income in your income tax return. If you're repaying less than your required repayment amount, you have to use the difference as part of your RSP income. For example, if you paid only 2,000 out of the 4,000 required payment, you will have to include 2,000 as RSP income in your income tax return. If you're repaying more than the required repayment amount, your home buyer's plan balance will be reduced for the next few years. You will have to pay the remaining amount until your balance is zero. The amount of years to repay will not change. And as the example we just mentioned, the 60,000 withdrawal for two people, if you look at the chart, every single year starting 2025, you will have to pay the 4,000. If 1 year, as shown here in 2027, you paid more, the balance will be reduced in 2028. Now let's talk about important things to know.
Okay, so for the important things to know for RSP home buyers plan, first one is the funds you withdraw have to be in your RSP at least 90 days. So that's something that Noor highlighted earlier as well. Ensure that you know your contribution limit for your RSP. If you liquidate your investments like stocks, ETFs, or what have you, you need to wait at least 2 days for the funds to settle in your RSP account. If you have any currency change request, though, allow it at least 2 days for the funds to exchange and settle in your RSP account. On the other hand, if you hold both a spousal RSP and a regular individual RSP, your combined maximum withdrawal amount under the HBP is $35,000 or any Canadian equivalent. You're also considered a first-time home buyer if you have not owned and occupied a home or one that your current spouse or common law partner owned in the 4-year period. So a lot of people ask what this 4 period is, and a lot of confusion from this one. So the 4 period is 4 years prior to purchasing a home. So the period starts on January 1, and then what you're going to do is period starts from January when you withdraw the funds, and then it ends on 31 days before the date of your withdrawal for your RSP. So for example, here, if you are withdrawing on June 30, 2023, you move 4 years back to January 1, so 2019, and then the end of the period will be 31 days before the June 30 withdrawals, which will be May 31. And typically, you won't be allowed to withdraw funds from a locked-in RSP or a group RSP. Hope that helps. Okay, so now we are in this section, which is questions and clarification. So before we move on to the next sections, again, I just wanted to take some time to ask for any questions or clarification from the previous slide. So Noor and I covered some stuff about home buyer's plan. If you have questions, we're just gonna go through the Q&A tab to answer some of those questions. And I'll have our mortgage advisors here, Jamila and Darren, to answer the questions. So let me just take a look at the questions right now. So again, feel free to ask for any questions and clarification in this section. Okay, so we do have one question here. And the question is, what happens if we fail to repay $35,000 in 15 years? I see Darren trying to answer it. So Darren, if you can answer it live as well here, that'd be awesome.
Sure, no problem, Carlos. So yes, the answer to that question is every year there isn't a lot of amount that you will need to repay to keep you in the 15-year timeline. Okay, so if you don't pay that amount back within the year, it gets added to your annual income, which won't be eligible for income tax deductions. So basically you'll be paying taxes on it.
Thanks, Darren. All right, we do have another question here. Do you know if folks on permanent residency, so people who are PR, are able to open up an RSP and be eligible for the home buyers plan? And again, Jamila and Darren, you guys can answer this.
So if you are on permanent residency, you can withdraw under the home buyers plan as long as you're eligible for your RSP contributions to begin with. If you lose that residency after the withdrawal is made, you may have to repay it back in full.
Thanks, Jamila. Okay, so I see that we still have some questions here. I wanted to let everyone know that we're still going to have the Q&A period at the end of the webinar. So please keep those questions and we'll definitely cover them at the end of the webinar. So with that said, let's cover the next sections, Noor.
Perfect. Thanks, everyone. So now let's talk about how to apply for the home buyers plan. To do so, you need to complete the CRA buyers plan form, hand sign, and physically mail it to Questrade. You need to complete the Questrade's home buyers plan, RSP withdrawal request form, and digitally sign it. You need to upload both the CRA home buyers plan form and the Questrade's home buyers plan withdrawal request form in your Questrade account. You need to physically mail your CRA's home buyers plan form to Questrade as per government regulations. You also need to upload a void check or a direct deposit form to your Questrade account. You need to monitor your status through your account management, through the upload documents and the upload history section. Now, for the overall processing time, it normally takes about 5 to 10 business days from when your documents are correctly filled out and arrive at Questrade to when the home buyers plan funds are available in your bank account. This includes our time to process the documents, which is typically 1 to 2 business days, the number of days for the money to appear in your bank account once we have sent it to your bank, and this varies depending on the withdrawal method you use. For electronic fund transfers, it may take up to 5 business days. For wire transfers, it can take up 1 to 2 business days, and for checks, it can take more than 10 business days. With that being said, please allow enough time for mailed or courier documents to arrive. Processing of the documents starts as soon as we receive your scanned digital documents. Now let's talk about other programs you can use for the first-time home buyers. The first one is the GST or the HST new housing rebate. Depending on the province that you reside in and your situation, you may be eligible for the GST HST new housing rebate if you buy a new built home, significantly renovate an existing home, or rebuild a home that was destroyed. The rebate allows you to recover some of the goods and service taxes or the federal part of the harmonized sales tax you pay towards these purchases. The other thing that you might be able to take advantage of is the land transfer tax rebate, where you can receive a rebate on some of the land transfer tax if you live in Prince Edward Island, British Columbia, and Ontario. If you're buying a home in the city of Toronto, there's also the municipal land transfer tax. And as of March 1st, 2017, you can also receive a rebate up to $4,475 for this municipal tax. There's also the first-time home buyers tax credit. First-time home buyers purchasing a qualifying home can claim up to $10,000 non-refundable tax credit for you and your spouse or common law partner, and this comes to a total of $1,500 in rebate. There's also the tax-free first home savings account, which is a new registered account. It's set to come out sometime this year in 2023 to help first-time home buyers save for a home purchase. The FSHA allows you to contribute an annual tax deductible contribution of $8,000 with a lifetime contribution maximum of $40,000 per person. Funds withdrawn to purchase a qualifying home are non-taxable, and contribution to the FHSA would lower your taxable income of equal amounts.
Okay. Again, thank you, Noor, for covering some of those sections. So again, here we just wanted to take some time to ask for any questions or clarifications from the previous slides about the different programs for first-time homebuyers or HBP if you still have some questions. Again, if you have any questions, please type them into the Q&A tab right now, and we'll take 1 to 2 questions before we move on to the next poll. Okay, so let me just check some of the questions here. And this is for the RSP again, for home buyers plan. We have a question from Damon. How does the withdrawal and putting dollars back into RSP affect contribution limit or your contributions available? So if anyone can answer that. So again, the question is, how does the withdrawal and putting the dollars back into the RSP affect your contributions for RSP?
For sure. So the funds that you put into your RSP for savings, that will take up your contribution room for the year or your allotted contribution room. When you withdraw the funds, that amount or that contribution room does not reopen for you necessarily. However, to repay the home buyer's plan, what you would need to do is make your deposits into your RSP account. And during tax time, there's a form that you'll need to fill out and submit to indicate how much of your yearly contribution is going towards the repayment. That way it does not take away from your annual contribution room and it gets applied just to your repayment amount.
Awesome. Thanks, Jamila, and hope that helps your question there, David. Okay, let's move on.
Awesome. And now let's talk about understanding your budget and credit. Why is it important to have a good credit? Your credit score is a reflection of your financial health, especially when applying for a loan. The healthier or better credit score you have, the more opportunities you get in qualifying for a loan, such as a mortgage, car loan, credit card, etc. The term good credit refers to having a healthy credit score and credit report, and having a history of paying bills in a timely manner. Weak credit, on the other hand, is often reflected by low credit score and a history of unpaid or late credit repayments on your credit report. Please note, sometimes weak credit can be offset by other things, such as a guarantor or a larger down payment for a home purchase, and this will entirely depend on your situation. A very poor credit is often the result of having a long history of delinquencies, bankruptcies, collections, or foreclosures. At this time, it is very risky for lenders to lend money and can take some time before you can build your credit history. Now, what is normally a good credit score? A credit score of under 660 can generally be considered poor or fair. A good credit score falls between the 660 and the 724 range, while a very good credit score lies between 725 to 759, and a score of 760 and above places your credit score in the excellent category. Now, how is your credit score determined? 1, history of on-time payments. Missing payments can affect your credit worthiness negatively. 2, credit utilization. Credit providers assess whether you're managing your credit usage responsibly. They do this by checking the available credit you have, which is basically your credit limit, over the amount of credit you use per month. 3, unpaid balances owed or debt. Sometimes you may have some unpaid balances or debt that's still in your file. There are times as well when those balances owed or debt have not been processed properly or as a mistake. And as a tip, when something like this happens, contact your credit bureau to validate and reassess your record. 4, the length of the credit file. Typically, having a longer credit history is beneficial for you if you've been managing it properly. 5, history of delinquencies such as bankruptcies, consumer proposal, or collections. Filing for a bankruptcy could severely affect your credit score and drop it to the lowest possible rating. It stays on your credit file for 6 to 7 years, and lenders and insurers are less likely to lend you a loan within that time frame. 6, types of credit used. Normally having different types of credit lines allows lenders to evaluate how you can manage your credit. And typically having at least 2 or more types of credit can be beneficial to your credit score. And lastly, history of hard inquiries. A hard credit inquiry is a process of lenders checking your credit file. If you get multiple hard credit inquiries within a short period of time, it can affect your credit score negatively, as it may show from lenders that you're constantly in need of money to borrow. How can you improve your credit score and report? 1, paying bills on time, either the minimum or the full amount each month. 2, keeping your credit utilization low. Using over 35% of your available credit may suggest you are spending more than you should. And as a rule of thumb, keep your credit usage under 30% of your credit limit. 3, create a plan to pay off any outstanding balances. Schedule time to pay off any outstanding balances. Consider contacting the institution where you have any loans and discuss repayment plans or options you may have. You can also diversify the type of credit. Lenders typically check how well you can manage different types of credit or loans, and this includes installment loans, such as car loans, mortgages, or student loans. And then there's also revolving loans, such as credit cards or line of credit. You can also avoid applying for credit with different lenders within a short time span. A credit application requires a hard credit inquiry, and like we mentioned, too many hard inquiries can result to a negative impression as a credit card holder, as it may seem you are overspending or have a hard time managing your credit line. And 6, you can close the newest credit card rather than the oldest one. If you are canceling or closing a credit card, consider canceling the newest one. Lenders typically want to see the history of your loans. The longer you are within an institution, the better, as it can suggest you are able to keep and manage your credit in one place. Now, let's talk about how we can help you. We have our pre-qualification through our affordability calculator. You can get an estimated maximum purchase price that you can qualify for a home based on your submitted income and expenses. And we also have our pre-approvals. You can get approved in a matter of minutes with our better rate mortgages. It's quick and easy online, and you can lock in your interest rate for 120 days. You can also start house hunting with confidence. And if you want to learn more about our pre-approvals, you can scan the QR code that is presented right now.
All righty. Thanks, Noor, and thanks for everyone for your participation today. We'll now move on to our live Q&A period, where the focus is on you. Please type your questions into the chat window. Again, please leave your questions on the Q&A tab window, and we'll be able to help answer them. We'll be right back in a minute or two once we read through some of your questions, so please stay tuned. Okay, so now we're back. I'm just going to check the questions here. All right, we have a question here for FHSA, and Darren and Jamila, if you, anyone can answer this one, by the way, either you, Jamila, or Darren. So feel free. So the first one is, do you have to repay anything for the FHSA after withdrawal?
So Carlo, to best answer that, what we can do is we can, because the program hasn't started as yet, we will be able to put the link for the FHSA in the group, whereas any of the attendees can actually read up on it a little bit more, if that's fine.
Awesome. Yes, so I think that's best as well. Just a caveat for everyone, it's not fully alive yet, or rather it's not available yet, so there might be some changes still before it's launched in April 1. But as of now, what the government of Canada is saying, that you don't have to repay for the FHSA after withdrawal. So it's a little bit different than HBP, where in HBP you have to repay them after the second year, but for FHSA you don't necessarily have to pay for them. But again, that can change, so we'll just leave the link in the chat so you guys can take a look. Alrighty, so I do have another question here. So in talking about the credit score earlier, how many years do you need to basically repair your credit if you just had a bankruptcy or consumer proposal? typically, how long will that take?
I can answer that one, Carlos. So typically for any kind of bankruptcy that you've had, it has to have been discharged at least 2 years. Usually when you're searching for mortgages particularly, lenders will look for your credit history or a strong credit history over at least 2 years.
Awesome. Thanks, Jamila. So it does take a while before you're able to repair your credit. Okay. We do have another question here. So in terms of just going back to the programs, are there any programs though to help people who are new to Canada who don't have credit yet? So someone who just came here and still building their credit, are there programs there specifically?
So yes, Carla, there are new to Canada programs that any individual who doesn't have set credit as yet or established credit within Canada. So yes, there are, and if I remember correctly, that can actually be found directly through the CRA's website in terms of the new to Canada program for home buyers.
Awesome. Thanks, Darren. Then I have a question here as well. Does investing in a rental unit, sole purpose of renting to third parties, impact my first homeowner program incentives? So one of the questions here in our Q&A tab.
So if you're referring to the first-time home buyers plan from the RSP, then unfortunately you wouldn't be able to withdraw from the RSP for a rental unit specifically. It does have to be for a primary residence for yourself or for a qualifying family member.
Perfect. Thanks, Jamila. Then we also have a question here. So I think I'm going to take two more questions and then we'll wrap things up. So someone's asking, there's a pre-qualification and affordability calculator. What's the difference between the two in your website? I think
I can
go ahead.
I can take that, Carlos. So the difference in the two is the affordability calculator is essentially a tool whereas you are, inputting your details like your income, any debts, expenses, stuff like that. And it kind of really helps you to see what you can actually qualify for. Once you see what the maximum amount is that you can qualify for with QuestMortgage, then you can move on to the pre-approval stage. If houses that you're looking at fall within that category. So that is essentially the difference. So the pre-approval is where you're actually doing the application to get pre-approved, whereas the affordability calculator is just a tool to help you understand what's the maximum amount that you can borrow based on your current financial circumstances.
Mm-hmm. And just to follow up on that question, Darren, is there a time frame for, let's say, pre-approval? Is it like 90 days that you need to take it? Is it 80 days?
So with the pre-approval, once you actually submit a pre-approval application, so first thing you should know is you actually get your decision in real time.
Mm-hmm.
And once you actually get that decision, if you are pre-approved, then the rate that you lock in is valid for 120 days. So that essentially means that you have 120 days to actually secure a firm offer to purchase.
Mm-hmm.
And also convert that pre-approval into a full application, have that full application potentially approved and fully funded. And when we say funded, that means you're essentially, paying the seller and moving in. So that's what your 120 days window would entail.
Mm-hmm. Sounds good. Thanks, Darren, for that clarification. And then we'll just take one more question before we wrap things up. So we have a question from Damon again, and that is, what if it's a duplex? So I'm assuming purchasing a duplex and you're going to live in half and rent the other. Will that be something wherein you can still get first-time homebuyers incentives?
So you can. So as long as you're occupying the property as your primary residence, it can qualify under the home buyer's plan. So even if, let's say it's a duplex or a fully detached home where you're occupying part of the home and renting another part, that would still qualify.
Right. Perfect. Like house hacking. Awesome. Thanks, Jamila. Okay, so I guess we'll just move on to the next section now. First of all, thank you everyone for your participation and questions and answer. Hopefully our mortgage advisors, Darian and Jamila, were able to help your questions. Okay, so thanks so much, Noor, and thanks to everyone for attending and participating today. Please keep an eye out for the on-demand version of this webinar, which should be available in a week or so, as well as the post-webinar survey. So please stay tuned. We want to make sure the topics of our future webinars are what you're looking for. And if we didn't get a chance to answer your questions, please send us an email at questmortgage@questrade.com, or please see the Calendly link. Hopefully, you guys can send the Calendly link in the chat right now to book a time with a mortgage advisor. Again, thank you so much, everyone, and take care. Have a great rest of the afternoon. Bye-bye.